What's up everyone, how's it going? Welcome to today's video. You may be wondering, if ChatGPT and Claude Code can do a lot of coding when it comes to systematic trading, is it really that perfect? And that's the question we'll be answering here today. Now, what we're going to attempt to do today is code a makeup strategy as if we were actually trading it, and see if you can spot any errors that ChatGPT or Claude may make. And there are a few errors that are pretty common when it comes to this. One of those errors is called look ahead bias. And what look ahead bias is say you're doing something overnight, right? And you have certain breakout levels or momentum levels or whatever levels, right? Say you're using past data to predict the present, but that present moment is not occurring right at that moment, but it's actually happening later. How can I make this more simple to understand? Right, so say we marked out some levels from yesterday's close, right? And say these levels are right here. Now, we are supposed to enter right when we break this level. But what if that happened overnight? Well, it's obvious that we can't really enter a position like that overnight. So in our data or in our coding process, it might enter at the open right here. And take a look at that, right? If we are supposed to enter here for the longs and we enter here for the longs, do you see how there's much better of an entry at the open? And this phenomenon will actually skew our results typically for the better, and it may make you think that your strategy is insanely good when in reality it's really not. Or another case could be that if we're here and we want to enter here and the open is actually here and we're trying to take longs, instead of entering along here, maybe in the code it enters along right at the breakout level, when in reality it's right there. So it's a clear error where you're skewing results towards the better. And this is one of the main things that can happen when you're using ChatGPT or Claude Code or even your own code as well. Now, there are also other methods of bias, right? And one of it is called sampling bias. And what sampling bias is that you're looking at a certain sample set that your strategy works in, but it doesn't work in another market. For example, right? Say we look at SPY and a strategy works between 2010 to 2011, but we only use that sample to determine if the strategy works. And what we see is that before 2010, the strategy is crap. After 2011, the strategy is also crap. So you took your sample, you made conclusions based off of it, but your sample isn't big enough, or it's too niche that you can't essentially apply these results to another market or the actual symbol that you're trading as well if certain conditions are met, right? You want to ensure you're testing a wide variety of sample sets to ensure that your results are statistically significant. And even if you're going to a different symbol, make sure you test it again, because some things may work on one symbol that may work on another. A good example is that something that is a fundamental strategy for oil may not really work for a gold strategy. Another example of an error is Another important thing that is very common is known as survivorship bias. And what survivorship fallacy is where you focus mostly on your winners and don't really take that much significance to those losers as well. And the issue with this is more common when it comes to discretionary traders, and I felt an issue to this as well. Although I was profitable as a discretionary trader and was pretty profitable at that as well, sometimes when it came to journaling trades, you journal your trades that did well more than you journal the trades that did bad. And also, sometimes you don't even log those small losses that you make simply because they're small losses and you focus on the big ones. But that again is a very, very, very big error you can be making, because all those small losses can start to add up. Even break even can start to add up in the downside because of these fees and commissions. So it's very important to be taking everything into consideration when you're finding your metrics, finding your equity curves, and so much more. Now that we've talked about these three types of bias and typical errors, let's see if we can build a strategy on ChatGPT that actually falls in front of these errors and makes these errors. So let's get into that. And what I'm going to do is I'm going to get Claude, and I'm going to make Claude give a prompt to ChatGPT to make it include look-ahead bias. Give me a prompt that clearly has look-ahead bias for a what's it called, experiment. Give me a prompt that clearly has look-ahead bias for an experiment. I will give it to ChatGPT to attempt to code the strategy with the bias included. The trading strategy I want to have look ahead bias in is a coin flip strategy. So it doesn't necessarily need to be in the financial markets, but can be modeled via an equity curve. If the coin flip thingy does not work, use something similar that can easily fall victim to look at bias. And you should be able to start to create these prompts and test different things out yourself, because I mean the best way to learn, in my opinion at least, is to test these things yourself. And it's kind of trial and error process, but you start to learn a lot of different things in the trial and error process, that it's not, you learn more from your improvement and your error fixing than the actual trial and error itself. So build a concept. The rules are simulate buy, go long to flip. Sorry, nice to read. Aha. Okay. And I'm just gonna say, give me the code for a Google Collab notebook that does the following. Well, the rules are this, print the resulting equity ratio. Alright, but there we go. Now, ChatGPT will go ahead and code this, and you can open this up on Google Colab or Jupyter Notebook. We're going to be having a video on how you can download Google Colab, how you can download Anaconda, and different things that might make you set up for doing all this as well. So this does create it pretty quickly. So, I mean, this is some pretty simple code. I mean, I'm pretty confident that this code will do exactly that. There shouldn't be logical errors, but there will be look-ahead bias. And no way, it lets us run it in here. Ooh, that's actually really cool. I think this is new. Wow. Okay. Well, I'm gonna go ahead and put this on Google Collab as well, because why not? And we should be seeing very similar stuff, hopefully. There we go. Yeah, exact same thing, right? We see that our win rate is above 50%, which is common, right? Because typically it's basically 50%, right? Sharp ratio is positive. Final equity is 11x basically. Not 11x, 11.984. But we see that, look at the equity curve, right? You see how it's very positive, and this is taking advantage of look ahead bias, right? Now, give the code without any look ahead bias. Now we're gonna see it's pure look ahead, right? And this can happen and you won't know it, right? So it's very important to keep a track on all of these and be very careful, right? I mean, if you take a look at the equity curve now without any look ahead, okay, I think it's running the other one. Hold on. This. Use the previous 3 flips to decide whether to go long FI. Okay, hold on. This is also skewed because we'll have our losing streaks, no? Decide whether it paces in Google Collab. Make it a skewed or increase sample size to 10,000. What I'm essentially trying to show is that you see how this is a very clear positive equity curve. Typically, these things will start to crash or be very random as we increase the number of flips. And we'll go ahead and run this once the prompt. Right, and you'll hopefully see that there's not really an edge in here. Okay, what the hell is that? It looks like we got a winning streak right near the end, or the code is wrong. But essentially, the point is that these strategies will not be profitable. This could be profitable because the flips are independent to each other and this and that, but in the real markets, you will not have a coin flip strategy. This is just for the purpose of experimenting and to show you guys that using ChatGPT and Claude, although it may seem perfect, it may result in different errors, and it's important that you catch on to these as fast as possible. And note is, if your results look too good, check for any biases, because if your Sharp is above 2.0 with fees and commissions and everything included, it's pretty likely that there's some type of bias or error. But yeah, that's essentially the entire point of the video, is to introduce you guys to these biases and errors and show you guys how AI coding can actually cause these biases and errors even if it does not know about it, simply because of either the way you prompt or just because of an error in the coding process as well. So very important to catch on, but that's all I have here for today, and I'll see you guys next time for another compilation video. Looking forward to it. Goodbye. Wake up,